So this was the fourth week of January, and what happened at Nifty? Let's check it out first. At a Nifty level, Nifty was down by 1.015%, and it closed at 21,352 for the week, which is slightly above the uh, you know average P that it has been trading over the years. So I would say that Nifty is trading a little above its average P, so it's not significantly overvalued, but yes, overvalued even at this price. Now, also there is a lot of wait and watch because of the budget and the upcoming elections. So it's going to trade within this zone is what is expected. Now, in terms of the sectors in focus, media went down by 10%, primarily because of the Zee-Sony merger being called off. Bank Nifty again down by 2.59%, the drag being primarily because of HDFC continues, and pharma up by 1.74%. So those were the sectors in focus during the week. Now, why it happened, as I mentioned, for the media, it was primarily the Zee-Sony merger collapse, and there's a lot of selling pressure for HDFC Bank from FPIs because of the rising US Treasury yields. Now, the weekend there is also a news that LIC would be investing in HDFC, because of which a lot of the shocks that HDFC Bank is currently seeing because of this selling pressure should get absorbed. Let's see. Now, in terms of the results during the week, the primary companies that announced their results were SBI Life, Tata Steel, Indian Oil Corporation, Bajaj Auto, and Yes Bank. And as the process that we have been following earlier, we have used BARD to pull out the numbers for each of these companies and then tried giving you a sense of what the numbers are indicating in terms of absolute numbers and the trend, and also giving you a sense of what the management has indicated. So let's start with our first company, that is SBI Life, which is in the insurance sector. Now, from a premium perspective, which is one of the major metrics for the insurance company, it went up by 16% year on year to close at to be at 22,316 CR. Profit up by 6% to be at 322 CR. Value of new business, which kind of indicates the customer acquisition, up by 11.3% year on year to be at 1,510 CR. Annualized premium equivalent also up by 13% to be at 6,130 crores. Now, this is the thing which brought in pressure or kind of added the negative side of the overall business. As I mentioned, it's primarily the customer acquisition cost and the lifetime value of the customer that is being acquired. Now, at least going by what the kind of customers who have come into the system, the overall lifetime value is gone down by 3.4% year on year to be at 24.4%. So that's what brought in pressure into this particular stock. Overall assets under management up by 24% to be at 3.7 lakh CR. So that's primarily SBI Life and numbers. In terms of the guidance from the management, no specific very significant guidance, but it did indicate a lot of confidence in driving premium growth, particularly in the individual annuity segment. And the results were a mixed bag with positive signs in premium growth, and as I mentioned, there is a lot of room for improvement in profitability, so the kind of customer that they're bringing in. So that is SBI Life from numbers perspective and the guidance. Let's move on to our next company, which is Tata Steel in the metal segment. So Tata Steel, in terms of the numbers, the revenue was down by 3.1%, but flip side is that the profit went up by 503 CR compared to a loss of 2,233 CR year on year. Now, EBITDA went up by 54.7%. So primarily the results are positive for the Indian entity or the Indian segment. So there is a profit of 1,242 CR compared to a loss of 881 CR for the Indian segment, where the European segment still is under the weather and it had a loss of 729 CR compared to a loss of 1,343. So overall, it's moving in the right direction, but from an anticipation perspective, I think more recovery was expected. Now, from a guidance perspective, the management expects strong demand in the Indian market, particularly from the construction and auto sector. European demand remains subdued. That's what the expectation is. Now, domestic steel prices have remained stable in the near term with potential upside on input costs, whereas the European prices are expected to be volatile due to global dynamics. Management also expects the global economic slowdown impacting steel demand, rising input costs, and geopolitical tension disrupting supply chains and increasing costs. So, all the management has given a very conservative guidance. The results are fairly positive. In the upcoming months, I think it will all depend upon how the geopolitical situation is and the steel prices. So let's move on to the next company, which is the refinery, that is the Indian Oil Corporation. From numbers perspective, revenue down by 2.3%, but again the profit went up significantly to be at 9,029 crore. Operating income up to 11,889 crore. Operating expenses also down by 7.11%, which is the primary reason that the profit margins have gone up. Now, from a guidance perspective, there's no specific guidance from management, but IOC is investing in expanding its refining capacity and petrochemical business, which could drive future growth. Fluctuation in oil prices can impact IOC's profitability in the upcoming months, and the transition towards cleaner energy could pose long-term challenges for the oil and gas industry, which is known to all. So that's pretty much the overall guidance from Indian Oil Corporation perspective. Let's move to the next company, which is Bajaj Auto. From the automobile sector, revenue up by good 30% to be at 12,114 crore. Profit up by 37%, and we've seen what a rally the stock has had in the recent past to 2,042 crore. EBITDA down by 37% year on year to be at 2,430 crore. Margins up by 1% to be at 20.1. Overall units sold for Pulsar, which is 6x the industry growth, 400,000 plus, and 40,000 plus commercial vehicles sold, 2x the industry growth. So very good numbers from Bajaj Auto. Definitely the stock was in a run up, and I think it justifies what the run up it has already given. Now, from a guidance perspective, management did express optimism about the continued growth for the domestic two-wheelers. Then the second part is that they anticipate strong momentum in the premium motorcycles segment, where Bajaj Auto already holds a strong position, and there is challenge in the export market due to global economic uncertainties. But there is recovery in exports, particularly in Africa and Latin America, which happens to be a major market. So that was Bajaj Auto in nutshell. Let's move on to our next company, which is the Yes Bank. Probably like everybody has this stock. So from a numbers perspective, net interest income up by 2.3%, profit up by 49.7% to be at 231 crore. Operating profit up by 25% to be at 914 crore. Gross NPA stable at 2% year on year. And net NPA 0.1 to be down by 0.1% to be at 0.9%. Now, Yes Bank has been there in everybody's portfolio, and this is one of the results which has been always expected. Now, there's no specific guidance from the bank management as it is, but the digital initiatives has been on their focus and will continue to be there. The bank management is confident of managing the rising interest rates and the potential impact of economic slowdown. So at least there is a lot of confidence that is being reflected that bank is on a route to recovery, and it is trying to address asset quality issues and ensuring sustainable NPA. That brings us to the end of all the quarterly results that we covered. In our links, we will have the links to the BART, which has all of these information from where it has been pulled, and you can further query it or reach out to us for any kind of further analysis. I'll see you in the next one, wherein we'll cover this week's upcoming week's details. We expect Nifty to trade sideways in this upcoming week. Primarily, it's a wait and watch because of budget and upcoming elections. For now, thank you for watching. I'll see you in the next one. Bye.